Hello friends and welcome back to the Brilliancy Point. Today we are going to learn how to calculate the capital contribution, that is the amount to be brought in or withdrawn by the remaining partners at the time of retirement of a partner. So in this video we have just covered one type of case where we are given with the new profit sharing ratio of the remaining partners and the entire capital to be paid to the retiring partner is to be contributed by the remaining partners. So let us begin the video. I have taken a question from T.S. Grewal Double Entry Bookkeeping and I hope you will find this question in your book. So let us start the question. The question says, Naresh, David and Aslam are partners sharing profits in the ratio 5:3:7. On 1st April, Naresh gave a notice to retire from the firm. David and Aslam decided to share future profits in the ratio 2:3. So there is a change in the profit sharing ratio between remaining partners. Then the adjusted capital accounts of David and Aslam show a balance of 33,000 and 70,500. And the total amount to be paid to Naresh is rupees 90,500. So this total amount to be paid to Naresh, it was 90,500, which means that the balance in the capital account of Naresh was 90,500. And how this amount has to be paid? This amount is to be paid by David and Aslam in such a way that their capital become proportionate to their new profit sharing ratio. So one important point to notice here is that this amount which is to be paid to Naresh, it is not to be paid out of the existing bank or cash balance of the firm. It is to be paid by the remaining partners, which means that this entire amount 90,500 will have to be brought in by the new partners in order to pay Naresh. So the current bank or cash balance existing in the firm, it has to be ignored. And second thing, the capital balance of Naresh is not to be considered as a loan, but it is to be paid off, and that too it has to be brought in by the remaining partners. So for clear and better understanding, we will create a table as you can see on the screen. The first column will be of particulars, the second column will be of total, and the remaining two columns will be of remaining partners. Now you must have a question that why didn't we create a column for the retiring partner? It is because retiring partner is going out of the firm. So he won't contribute anything in the capital of the reconstituted firm or in the new capital. So there will be no alteration in the capital of the retiring partner. There will be no adjustment in his capital. He will simply be paid off his balance in the capital account, or that balance will be treated as a loan, but it won't create any alteration in the capital because he is going out of the firm. So that is why we will create columns only for the remaining partners, because what we have to calculate the adjustment or the alteration in the capital of remaining partners. So initially in the very first row we will write the adjusted capital, that is the given information. So what is the adjusted capital of David? It is 33,000 and the adjusted capital of Aslam is 70,500. This gives us the total capital of the firm as 1,35,500. We will simply add both these amounts. Now it is given in the question that the total amount to be paid to Naresh is rupees 90,500 and this amount is to be paid by David and Aslam. So as I already told you before, that whenever this line is given, that the amount to be paid to the retiring partner, it is to be brought in or it is to be paid by the remaining partners, it means that we have to ignore the existing cash and bank balance in the firm. We have to assume that the cash and bank balance in the firm is nil, which means that there is a need to bring in some cash in order to pay off the retiring partner, because we have to pay 90,500 to the retiring partner in cash. So where will this cash come from? Because there is no cash in the firm, which means that the remaining partners, they have to bring in some cash, and the total cash to be brought in by them is 90,500 in order to pay off Naresh. Now, what will be the entry when new cash is brought in the firm? Whenever a partner brings cash in the firm, what entry do we pass? The entry is cash account debit to that partner's capital account, right? Because it will increase the capital of the partner. So here, total cash to be brought in is 90,500, which means that the capital of remaining partners will increase by a total amount of 90,500, because David and Aslam will together bring in cash of 90,500 and it will increase their capital by the same amount. So what will be the additional capital, or what will be addition in the total capital of the firm? The total addition will be 90,500. So the new capital of the firm will be adjusted capital plus additional capital, which is 1,94,000. Now it is given that the new capital of the firm, it is to be in the new profit sharing ratio. What is the new profit sharing ratio? It is 2:3. So we will divide this new capital in the ratio of 2:3, because that is what is asked in the question. So we will divide this amount in the ratio 2:3. That will give us 77,600 and 1,16,400. So what is the difference amount? That is 77,600 minus 33,000. That will give us 44,600. Similarly, 1,16,400 minus 70,500 will give us 45,900. So this is the additional capital to be contributed by David and Aslam. So finally, what will be the journal entries? The first journal entry will be for bringing in cash by the remaining partners, which will increase their capital. So the entry will be cash account debit to partners' capital account. Total cash brought in is 90,500 and it is contributed by David and Aslam. So to David's capital account, how much? It will be 44,600, and to Aslam's capital account, it will be 45,900. And the second entry will be for paying the capital, or for paying the cash to retiring partner. So that will be Naresh's capital account debit 90,500 to cash account, because cash is going out. Again 90,500. I hope this question was very clear to you, and if you really understood it, please don't forget to like the video and subscribe my channel. And in the next part, I'll discuss another case of capital contribution by the remaining partners. So till then, take care, bye.